Welcome to Technical Tuesday. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing wins versus loss ratio. Now, we spoke about this a little bit last week, and this is an extension to our money management series that we've been discussing over the past few weeks. But before we start, make sure to smash the like button. And if you do find value in this, to subscribe and share this video with friends and family. Now, wins versus loss ratio. Now, last week we spoke about a distribution of about 10 trades. 9 of them you either had wins or losses, and the last one you had either a loss or a win, depending on the distribution. Now, this is not talking about that. This is talking per trade basis. Now, what would you rather be in? What would you rather have? What makes more sense? Does it make more sense to risk $2 to make $1, or okay, this is the other option. Does it make more sense to risk $1 to make $2? Now, any businessman would tell you, you want to expand your business. You want to expand your money with the least money as possible. You want to risk as least as possible to make as much as possible. There's an old Chinese proverb that says, with the greater profits, it's always greater risk. And that remains true. However, if you do limit your risk, okay, and you get into an environment and you start thinking with this on a regular basis, that if I'm willing to lose only $10 on this trade, I must be willing to make $20 in this trade. And vice versa, okay? If I'm looking to make $20 in this trade, I'm only losing $10 on this trade. And you could do the exponential numbers for yourself. Like if you could do $200 to $100, $2,000 to $1,000, so on and so forth. And the reason why this is so important is because people don't really value their money, not because they don't know to, but because they don't know how to. The point is that what happens is when you open up an account in trading, you're kind of like souped in with the leverage and the margin, and you kind of lose perspective of that hard-earned money, of that whatever hourly rate that we all work on. Because what happens is it doesn't work like that in the trading world. You can make your day's income in a matter of seconds and minutes. And because of that, we lose perspective of our money management. So this realigns it. Meaning at any given time, before I enter a trade, I have to ask myself, how much am I looking to make on this trade? And how much am I losing on this trade? Vis-a-vis each other. I could either look at it of how much am I willing to lose on this trade, or I could look at it how much am I willing to make on this trade, and then I will know the opposite. Meaning, if I'm looking to make $20, I know I'm only losing $10 on this trade. Now, when I follow through, that's when my confidence shoots through the roof, because I can then trust myself. I can then follow through and have that conviction that I could always go back to my system, which is to cut my losses in half of what my expectations are. Now, what happens is to many traders when they enter a trade is that they enter a trade and they don't know how to let go, either for the upside or especially the downside. Most of us don't know how to lose in the financial markets, and this is where we get into trouble. How do you lose in the financial markets? What happens is when we get into a trade, we lose all objectivity. We're in it. We're emotionally connected to it. We want it to either go up or go down depending on our situation. If we're long, we want it to go up. If it's short, we'll find reasons in our head why it's going to go back down, right? We've done that. We've all rationalized that. So how do you stay emotionally disconnected for it? And this is a little bit going into the next segment of psychological trading and all that type of stuff that is 90%. Remember that number. 90% of trading success is psychology, 10% is skill. And that remains, those numbers remain true, not just 10 years ago, 20 years ago, 100 years ago. Those numbers will remain true forever because it's our expectations and our limitations of ourselves that we don't really understand how to let go to these type of trades. So I'm going to give you an anecdote that was taught to me by one of the first mentors that I had in the trading community. And he would tell me, accept the loss before you enter the trade. If you know, just like we spoke about last week, that there are going to be trades that you're not going to make money on, like the milk, like the bread, like the eggs example that we gave you last week. If there are for sure trades that you know you're not going to make money in, okay? And you know, going into it, it's impossible to be 100% right all the time. No one, in your personal life, in your professional life, in trading, no one's right 100% of the time. It just doesn't work like that. Now, however, if you could cut your losses short and say, okay, I know that I'm not going to be right on 100% of these trades, but I'm willing to accept that in order to take advantage of the trades, in order to make, just like Jill did, all those $25 losses. If I pre-accepted, I could let go emotionally. If I pre-accept, I'm going to lose $25 on this trade, I could lose that lack of objectivity and stay in the trade and just say, hey, it's at $24 and it's still okay. It's still within my comfort zone. I'm okay to lose $25. So it's at $24. I'm going to let it ride. And I could stay focused about what the trade is, and I could be honest with myself and say, hey, it's at $24. I'm going to give it another dollar because that's what I originally planned to. But I'm also allowing it to come back in case it does. And then when you see that it doesn't, you're not completely knocked out for the day. You put your stop loss at a place that's reasonable for you to get out. And that is what trading is about. It's about knowing to accept the loss before you enter the trade. It's about accepting the fact that you're not going to be right on every single trade. And that's okay, because if you remember of that distribution that Jill had, she had 25, 25, 25, 25 losses. She had 9 of those, but one of those trades, she had a massive gain, which made her a net profitable trader. Thank you for joining me on Technical Tuesdays. We'll see you here next week.